There's been a lot of positive headlines about uranium over the last few weeks, and some of the stocks that are focused on mining uranium have as much as tripled in value. So today I will tell you why this is happening and how to play it. Uranium, and how do you even invest in uranium? Well, let's talk about it. I'm going to go briefly over the new commodity supercycle that is just beginning and why uranium is one of the commodities that you should focus on. And I'm going to explain the rationale, the catalysts for why uranium is rising right now. And then I'll focus on some of the ETFs and stocks that are the best ways to play uranium. So if you just want to focus and hear about the ETFs and stocks, fast forward to the second part of this video. But if you want to hear why you should invest in uranium, why this makes sense, stick around. All right, before we talk about uranium specifically, I want to spend a minute on this new commodity supercycle that people have been writing about and talking about. So, you know that commodities obviously move in these long multi-year trends, right? And typically, since they are priced in dollar, they have this inverted relationship with the dollar, right? So when commodities are up, it's usually an environment of a weak dollar. And so let me show you these two charts that kind of demonstrate what I'm talking about. If you look at this chart here, this is oil over the last 18 years. Remember, back from 2002 to 2008, we had this huge commodities upswing. There was a strong demand, weak dollar environment, which obviously peaked at $150 per barrel back then. And then the last decade has been a completely different picture, right? We had shale exploration in the US with US energy independence, trade wars, dollar became very strong over the last 10 years, and Chinese demand was falling. So that also led in the end during COVID-19 to negative oil prices. Remember back in April 2020, oil was trading at -40 because there was no storage for oil. And the second chart that I want to show you here is from JP Morgan. This shows the fund allocation, the equity fund allocation to the energy sector. So back in 2010, 11, 12, portfolios allocated about 10-12% to energy as a sector. And that drifted down, all the way down to 3% as investors eventually gave up on energy. And so just to close this here, the super cycle kind of discussion here, people now are talking about, in a post-COVID world where global demand rebounds, where we have this huge pent-up demand. And obviously there's going to be a lot of energy consumption as growth really picks up as we ride out of COVID-19. People talk about this huge commodity upswing across the board, right? The real question is why focus on uranium as a commodity and not just buy a generic commodity index and let it sit, right? If there's a new super cycle starting in commodities. Let me give you 5 reasons why uranium is going to be one of those commodities that's going to massively outperform over the years to come. And a lot of those reasons have to do with the new incoming Biden administration and the changes in the US energy policy, right? We're moving away from a focus on coal as a dominant energy source and hydrocarbons in general to renewables and nuclear, right? So reason number 1, when Biden was campaigning, he was talking about the new Green Deal, right? Which is a central core of his energy policy. And investments in nuclear as an industry are part of that new Green Deal. Reason number 2, the US Senate just approved the American Nuclear Infrastructure Act, which is basically designed to boost investment in the nuclear industry and also establishing a strategic uranium reserve. What this means is that the expected closures of the 94 US nuclear plants have been delayed by as long as 2069. Now, reason number 3 is Biden just issued, among his many executive orders, one of them is a complete review of the supply chains. And remember, this was a big deal when COVID hit, right? Because countries suddenly realized how much dependent they are on foreign sources for really critical elements of whatever is powering their economies, right? We've seen it in the pharma industry, semiconductors. We're seeing it with chips now, which are completely shutting down the auto production, not just in the US, in Europe, right? All the chips are mostly made in Asia. Now, reason number 4 is uranium is now designated as a US, as critical to US national security, right? Among other minerals and metals that we mostly import out of China, uranium is now part of those. And remember, uranium is US is the biggest uranium consumer in the world, and yet the country imports almost 100% of it. And this is from countries like China, Russia, and Kazakhstan. So this is a big deal. There's going to be a lot more focus on domestic production in the United States. And reason number 5 is the agreement between Russia and the United States on how much the US can import, how much uranium they are able to import out of Russia. The limits have been extended recently all the way up to 2040. So with these limits still in place, now there's going to be obviously much more focus on domestic production in the United States. So what is the best way to invest in uranium? I'm going to give you a list of 2 ETFs and 5 companies that focus on uranium production either in Canada or the United States, and that should really benefit from this new cycle of investing in North America in production of uranium. Now there's going to be a ton of numbers, figures, some charts. I'm going to leave all the details with the names of the stocks, the tickers, the market caps below the video. So you don't have to take any notes, you can go through it at your own pace. All right, so the first ETF I want to talk about is the Global X Uranium ETF. You see on this page here from Bloomberg, it shows you the market cap is about $400 million right now, and these assets keep growing as people keep putting more money in uranium as a commodity. The inception date when this ETF started was in 2010, so a decade old, and the expense ratio is 0.71%. So it's not one of the cheapest ETFs out there, but it's not too expensive given what you're getting. And just to put this in context, for each $10,000 you would invest in this ETF, you would pay $71 in terms of fees per year. Now, if you look at this chart of the last 6 months, you see that this ETF has really done well since Biden got elected, and we have this new 180-degree turn back to nuclear as a core of the energy policy in the United States. But the chart I really want to show you is the chart of the last 10 years, since inception, right? Back in 2010, when this ETF started, that was right before the accident in Japan at Fukushima, when we had that nuclear reactor explosion. And at the time, this ETF was trading at $134, right? And we had this huge turn away from nuclear worldwide when people really shut down nuclear as an energy source across, Europe, the United States, and obviously as an investment, uranium really didn't perform very well. And so now finally, with new technology, new focus on renewables, we have again focus on uranium. Now, the third page I want to show you for this ETF, this is the components list, right? The companies that make up this ETF. The first one is Cameco, which is the biggest with $6.5 billion market cap, is making up 23% of this ETF. So obviously a huge weighting on Cameco, which just announced amazing results and obviously has done very well over the last 2 or 3 months as well. But other companies like Next Gen Energy, Denison Mines, Energy Fuels, Uranium Energy, they're all on my list that I'm going to go through. Now, the second ETF, and I'm not going to spend too much time on this one, is called North Shore Global Uranium Mining ETF, ticker URNM. Now, this one is slightly more expensive. It's only been here since 2019, and it has a little bit less assets under management, but you obviously have choices, right? So this is the other ETF. Now, moving on to the companies. So Cameco obviously is first on my list, ticker CCJ. It's, like I said, 23% of the URA ETF. It's trading at $16.60 right now, but it was as high as $45 back in 2011. And I'm going to go back to 2011 a lot as a kind of a reference point of where this industry used to be, right? When there was much more focus on nuclear energy, which is what we expect in the years to come. The next company on the list is Next Gen Energy, ticker NXE. They are a 1.4 billion market cap. They are 5.5% of the ETF, and right now they trade at 388. We can go back to 2011 because they had the RPO in 2013 only. Company number 3 on my list is Denison Mines, ticker DNN. Their market cap is 815 million. They are almost 5% in our ETF, and right now they trade at $1.20. But they were as high as 381 back in 2011. And by the way, they tripled in the last 3 months. So you see this huge focus on the uranium miners, right? Company number 4 on my list is Energy Fuels, ticker UUUU. U obviously because of uranium. The chemical sign for uranium is U. So this is a good ticker for them. Their market cap is $775 million. They are 3.5% as a weighting in our ETF. And they trade at $5.77 right now, but they were as high as $80 back in 2011. This is a company that's based in Colorado. They have the largest domestic production capacity in the US. So certainly a company that merits attention. And the last company on my list is Uranium Energy, ticker UEC, which is at $500 million in terms of market cap. They are about 2% in our ETF. They trade at $2.50 right now, but they were as high as $7.50 back in 2011. So this is the list of the 5 companies. One thing I want to say here is, aside from Cameco, which is a $6.5 billion market cap, all the other ones are kind of, in hundreds and hundreds of millions of dollars. So this is not huge market caps. This is not super large companies. So bear this in mind if you invest directly in those companies as opposed to the ETF, because obviously with low market cap, you're going to have less more volatility, less liquidity. So again, kind of going back to what happened with GameStop and some of the other stocks, when you don't have a huge market cap, this could be a factor when you invest in these uranium stocks. All right, so that's it for ways to invest in uranium. Obviously, remember that all of these stocks and the ETFs have done quite well over the last several months since Biden got elected. So make sure you do your due diligence, pick your entry points, have your stop losses. But commodities in general should be part of your portfolio, and exposure to miners and uranium in particular should certainly be part of it, even if it's a small allocation. Obviously, don't bet your house on the sector. Thank you for listening. I really enjoyed this conversation. Give a like to the video if you enjoyed it. Subscribe to the channel if you haven't yet, and I will see you in a few days.